an oversight of this thing, but we'll definitely delve deeper into having deeper knowledge into some of these incentives. And who is our guest for today? It gives me great pleasure to also introduce to you the special advisor to the executive chairman of the Federal Inland Revenue Service on tax incentives. No other person than Dr. Cletus Ade, SCA, FCTI. He is a seasoned tax policy expert and the former director at FRS, where he led the strategic reform on incentive design and administration. He will definitely be talking to us on the topic that we have captured, unlocking economic growth, navigating the new tax incentive in Nigeria. Today, I will be your host, but I will not be doing it all alone. You know me. My name is Olusegun Okwade, and I've been joined by my co-host, Oyebanji Lawal. Banji, great to have you on the show today.
Yes, please. Thank you very much. Good morning. My name is Oyebanji Lawal, and I would like to also welcome you to the September edition of Citn Taxation You. You're welcome.
Thank you very much. We will be doing this today, making a discuss on the subject matter. But before I go, I'm sure you all know the importance of having commercial on this program. I want to especially appreciate all our sponsors who have actually been making this program, the enlightening program that give a deeper insight into discuss on contemporary things. I want to especially recognize the executive chairman, Lagos State Internal Revenue Service, for the support we are getting in bringing this program live every month. Also, I want to especially recognize the executive chairman, Plateau State Internal Revenue Service. Thank you very much. I will not but recognize the executive chairman, Kwara State Internal Revenue Service. I refer to her as a woman that also do exceedingly beyond what men can do. They are the backbone that is bringing this program live every month. Special thanks to you. But you may be asking, how can we be part of it? You heard in our intro, you can always reach out to Dr. Oluwademi, who is our head of corporate communications, on the number that we will be projecting to you. Before I nosedive into today's discourse, it will be nice for me to pay some commercials. And then we go on this very short break. When I come back, we hit the ground talking on the topic of discourse today. My technical, you have the floor.
What if we told you you could carry out all your tax-related activities from the comfort of your home or office? With the KWIRS self-service portal, everything you need is just a few clicks away at selfservice.kwirs.com. Here is what you can do. You can file your payee assessment, submit your annual returns, individual and corporate, request your tax clearance certificate, apply for your CRIN, which is the Kwara Resident Identification Number, get your indigent certificate, register for Hajj and pilgrimage, and make all payment due to Kwara State Government. No paperwork, no stress, no office visit, just fast, seamless, and secure service anytime, anywhere. Start now at selfservice.kwirs.com. Need help? Call 070-0695-9477 or email helpdesk@kwirs.com. KWIRS. Play your part, pay your tax.
Welcome back. Like I mentioned the other time, we are in for another special edition of the Citn Taxation and You this September, where we will be discussing unlocking economic growth, navigating the new tax incentive in Nigeria. And our guest, like I mentioned earlier, is Dr. Cletus Adie, FCA, FCFI, ACTI. He is the special advisor to the executive chairman, FIRS, on tax incentive. Dr. Cletus Ade, good morning and welcome on board. Dr. Cletus, can you hear me? Unmute and please speak, sir. Please can you unmute yourself? You're muted.
Yeah, can you hear me now?
You're better.
All right.
Good morning. I'm glad to have you on our September edition of Citn Taxation and You.
Thank you very much.
So we'll be starting like this. We are having a discourse, knowing how vast you are on things that have to do with incentive, not just ordinary incentive. We're talking about tax incentive. And this you have done over several years. And looking at the new tax law, we want to unlock economic growth. Taking us through some of these new tax incentive. I want to give you the platform. Can you take us through what this topic is all about?
Just let me know. I don't have my slides or what I am going to be talking to us from right now. Are you projecting it, or I'm going to be using my laptop?
Just go ahead and speak to it.
Let me have clarity here, please.
You don't need to project. Go ahead and speak to it, sir.
Okay. The presentation is going to be very brief. I have a number of slides, which my friend Whitey said is not. It doesn't really look like slides, but let me just quickly run through them. The presentation is organized around a number of subtopics: overview of the Nigerian Tax Act and its importance, key changes to the Act, overview of the economic development incentives, key features, whether this new incentive regime materially differs from the previous one, that is the pioneer legislation, opportunities for economic growth, and presented by the new incentive regime, challenges, and of course, closure. The new Tax Act 2025 repealed and consolidated major tax acts like companies income tax, PPTA, and so on and so forth, replacing them with a unified and modernized regime that applies to both Nigerian and non-Nigerian taxpayers. The act extensively overhauled the Nigerian tax ecosystem to catalyze, promote economic growth, the ease of doing business in Nigeria, and of course, optimize tax revenue collection. The administration of taxes across different strata of government has been simplified by this new act, meaning that conflicts arising from overlapping, conflicts arising from multiplicity of taxes, and an environment where the taxpayer's cost of compliance is needlessly increased is likely addressed by this new act, making compliance a lot easier than it used to be. So what has changed? The new act introduced a number of sweeping changes, that create an environment for businesses to thrive and grow the economy. One of such is that the exemption thresholds of small companies, which are defined in this act as companies with turnover of 100 million and below, such companies are now exempt from taxes such as companies' income tax, capital gains tax, and so on and so forth. The act also created, changed the capital gains tax rate from 10 to 30%, thereby aligning it with the company's income tax of 30%. The beauty of this is that it now closes the gap where businesses attempt to classify their trading incomes as capital gains, thereby taking advantage of the tax rate differentials. It also introduced development levy, which consolidates, all the various special purpose taxes like tertiary education tax, all those levies, police trust fund levies, NIDA levy, and so on and so forth. The introduction of continuing with the changes, we'll soon get to tax incentives. The introduction of minimum tax rate, in which applies to Nigerian companies that are members of multinational groups. Those categories of companies will henceforth be subject to the minimum tax rate of 15%. In other words, where the tax they pay is below that, it has to be topped up for the effective tax rate, the minimum tax rate, to come up to 15%. It also increased penalty for non-compliance going forward. When this act becomes effective, any company that is not compliant with filing obligations and so on and so forth will now pay, a penalty of 100% for failing to file tax in the first month of failure, and 50,000 naira for every subsequent month that failure continues.
Dr. Ade, permit me to interject you briefly before you proceed.
Okay,
your
yeah.
institute, my institute, in the last 11th edition has given some insight into this. I would just want to crave your indulgence, possibly to just nosedive straight into some of the tax incentive, then I can ask some specific questions before bringing in my audience. Thanks so much.
Okay, that's good. That's very good. Okay. Okay. Yeah, the economic development tax incentive, just a brief overview. Tax incentives are generally tools deployed by governments across the globe to cause a change in the behavior of businesses or even human beings. The essence is to create an environment where, individuals or companies are attracted, are incentivized to bring in funds, invest funds in a manner that helps the country deploying that tax incentive regime, to take advantage of the economic benefits of such investment that are attracted. The objective is often to attract foreign direct investment, that's tax incentives, promote economic prosperity, and diversify the economy. Nigeria's previous flagship tax incentive regime, the pioneer status, also was implemented to drive those objectives, especially to promote nascent industries, especially those that are involved in the development of local raw materials and the promotion of labor-intensive processing. The legislation provided an initial tax incentive of 3 years, extendable for 2 years based on performance. That legislation, however, attracted a lot of criticism because transparency was in question, performance and measurability in terms of impact was also in question. And the new Tax Act, therefore, found it necessary to introduce, the economic development tax incentives as a replacement for that legislation. The economic tax incentive, therefore, represents a fundamental shift from a time-based tax holiday to a performance-based system that directly links reliefs to verifiable investments. The new framework is designed to be investment-driven, aimed at addressing the shortcomings of its predecessor, that is the PSI or tax pioneer legislation incentives. This particular incentive regime has very key features, some of which are the incentive innovation introduced the Nigerian Tax Act, or in the Nigerian Tax Act, is aimed at fostering growth and attracting investment in specific key areas referred to as priority sectors, which includes agriculture, among others, with some years. There are about 51 priority sectors listed in the 10th schedule of the new act, as against the 37, pioneer industry listed in the pioneer industry incentives. The president, however, has the right or the power to change or amend this list where he believes that, the performance of a particular sector is not sufficient yet to meet the economic requirements of Nigeria, or that there are still prospects for the development of that sector. The president, where that is the case, will, as a matter of fact, cause the amendment of that priority sector list. So what are the eligibility for admission into the priority list as defined in the 10th schedule? To be qualified for this incentive regime, a company must be incorporated in Nigeria. Companies that are exempted from incorporation, such as non-resident companies, can also, apply for that, but would have to have a permanent establishment presence in Nigeria. Companies that are not yet incorporated, was proposed companies
There seems to be a network glitch from your side, Dr. Ade. I don't know. The network is clicking.
Advantage of the incentive. The amount of qualifying capital expenditure required.
Okay, Dr. Ade, permit me to interject at this point in time.
Incurred before
can you hear me, sir?
production day,
there seems to be a
by any
network
company
glitch from your
desiring
end.
to take advantage of those.
Dr. Ade,
Okay.
I don't know, can you hear me?
You can't hear me very clearly?
No, it's actually flaking out
Okay,
there.
can you hear me
I
now?
want quickly go on a very short commercial
Can you hear me
break
clearly?
so that we can fix the network problem. If you are just joining us, this is Citn Taxation You.
Hello, are you still
the
there?
September edition. We'll quickly go on a very short break. When we're back, I will continue to engage our guest for today.
I can hear you.
Technical,
Can you hear me too?
please give us a commercial?
I think I love this thing for me. I'll share this with you.
Babe, I nearly broke my leg rushing out the door.
Oh no, I'm sorry, baby. Where are you rushing off to?
I'm rushing to the LIRS office to file my tax return. Nearly tripped on the stairs trying to answer your call.
Baby, come on. You can file your tax online without having to break a leg.
Yeah? Are you sure? You're laughing at me, Abby.
I'm serious. Okay, listen, I'm serious, baby. Listen to me. You can file your tax online using the eTax platform. It's easy and straightforward. Simply log on to etax.lirs.net using your payer ID and voila.
eTax is an automated electronic tax payment service that makes tax operations more convenient for taxpayers. Taxpayer registration or easy access for both new and existing taxpayers. eTax. Simple, quick, reliable, and secure. For more information on how to use the eTax services, log on to www.etax.lirs.net.
Welcome back. Just like I said, we have been guesting the special advisor to the executive chairman, Federal Inland Revenue Service on tax incentive. And he's been explaining to us some of the basic things that we actually need. He has spoken to the scope of the tax incentives, the priority sector that we have, where he mentioned that as against the 37 that we had before, we now have about 51, and spoke to the eligibility criteria that is needed and the power in which Mr. President had. My doctor, I want to go to some specific question which I want you to address. Let me speak to the area of production day and capital expenditure. How is company production day determined under the new EDTI regime? And what is the significance of qualifying capital expenditure? Unmute yourself, sir. Unmute yourself, sir. Okay. So, sir, I want you to speak to how company production day being determined under this new regime and the significance of qualifying capital expenditure.
Yes, a company's production day in the application, first of all, of by a company to secure economic development tax incentives, the production day is estimated in that application. And a production day normally is that day that the company, the priority company, begins to produce its priority products or provide its priority service on a commercial scale. When the economic development incentive certificate is issued to a priority company, within 1 month, the company is expected to make application to the relevant authority to certify its production day. And the relevant authority in this case is the Inspectorate Department of the Federal Ministry of Industry and Trade. The relevant authority having received that application for the certification of the company's production day is expected to, having certified the production day, expected to communicate or notify Federal Inland Revenue Service or the service, and of course the Nigeria Investment Promotion Commission of the company's production day having been certified. The company itself, having received the notification of production day certification, is expected to, within 1 month, apply to the Federal Inland Revenue Service or the service to certify, its qualifying capital expenditure, which it must have incurred before the production day of that priority company. The service, having received such application, which is made in writing, shall set in determining what qualified capital expenditure is required to be certified, shall take into account disposal of assets in respect of which qualified capital expenditure must have been incurred, and will take that into account in determining the value to be certified.
Thank you
Having
very much.
certified that, and
let me pause you there.
Yeah,
You've done justice to the production date. I will want my colleague to actually pick you up on the filing obligation and the returns on incentive order. Banji, can you take up the question?
Yeah, yes, please. Yeah, Doctor, the incentive comes with accountability, and priority companies are subject to enhanced complete reporting. So the question is, what are the tax return obligations of companies enjoying ETI benefits under the Nigerian Tax Administration Act 2025? Thank you.
Well, the tax returns obligations
Yeah.
under that incentive regime is that where a priority company, for example, is carrying on a business other than its priority business, it is expected to file tax returns separately for those classes of businesses. And in filing those returns, it's expected that, disclosures about the income and, of course, the books that are maintained in respect of those classes of business are separate, to the extent that relevant authorities are able to determine the turnover, profits or income of those separate classes of business. The essence is to be able to attribute income to identify income that are applicable to the priority business. It is important to also note that where the priority company does not maintain this separate account, the income of the priority company will be considered a non-priority income, and tax credit shall not be granted. In addition to that, the companies enjoying these incentives are also expected to file tax incentives returns in addition to their annual tax returns. A relevant tax authority that is enjoying such incentives is also expected, in addition to his annual tax returns, to file tax incentive returns. The very essence of demanding returns on tax incentives is to create an environment where the Federal Inland Revenue Service is able to comprehensively compile, tax expenditure report that reflects a global or national outlook in respect of funds or in respect of revenue that must have been foregone in tax incentives for that year or whichever year that the returns relate.
All right.
Thank you very much, putting us through on some of the obligations and the returns on incentives holder. I want to speak to the books of account and the audit requirement, where there are two streams of income, that is priority and non-priority. Record keeping becomes very crucial. I want to ask this question. What are the documentation and audit obligation for companies operating both priority and non-priority businesses?
Yes, I think I said that a few minutes ago, where a company is operating priority and non-priority businesses, the company is expected as a matter of regulation to maintain separate books for those separate classes of businesses. And such classes of those documentation must be sufficient as certified by an auditor for anybody inspecting those books to be sure that the turnover is what it should be, the income and all that, and profit. As a matter of fact, where a company fails to comply with that requirement, the entire income of that company will be considered as non-priority income. And as a matter of fact, it will invalidate the granting of economic development tax credit.
That is nice. While moving on, you have given us some of the insight into the eligibility, what can be. There will always be room where people will breach some of these things. And I want to speak on the cancellation and suspension of this EDT status. What are the circumstances that a company can actually go into before this EDT certificate can be cancelled? Can you hear me?
No, yeah, we're breaking, but you can come now. I can hear you now.
Okay, I'm asking that on the cancellation and suspension of the EDT status. Under what circumstances can this EDT certificate be cancelled or suspended?
Well, it's a straightforward thing. The priority company itself can ask that its what do you call it? Its EDT certificate, in Economic Development Incentive Certificate, be cancelled where it's no longer relevant to it. And then it can also be cancelled where that priority business ceases business or is under liquidation. It can also be cancelled where the priority company does not commence its operation within 12 months after its production day has been determined. The Minister of Trade and Investment can also cause the suspension of EDI certificate in situations where there's a breach of compliance by that company. As a matter of fact, the minister can require the suspension of that certificate until compliance with breached conditions are satisfied.
All right, thank you very much, doctors. On to mergers and acquisition. Now, what happens to companies EDT status in the event when there is a merger or acquisition or takeover? So what happens to those?
All right.
Thank you.
There are three scenarios here. The scenarios that one where the company or entity with an EDT certification or certificate acquires another company with an Economic Development Incentive Certificate. The incentive status of both companies will cease to apply on the expiry date of indicated in the EDI certificate of the acquiring company. In other words, companies will cease to have indicated on the certificate of the acquiring company expires. And for where a company, an EDT company, takes over the assets or business of an entity or company that is not an EDI certificate holder, that situation will arise where the company might revert to section 168 and 167, in which case they can apply, for the amendment of the EDI certificate for the purpose of including those, including additional products or the business that has been taken over. Now, where there are mergers, merging means that 2 or 3 companies have come together and have lost their identities. The merging company will, even where those companies have, EDI certificate advantage, haven't lost their identities, they will no longer be entitled to the EDI certificate or enjoy the reliefs, available to them as far as that is concerned. What will happen is that they may also have to revert to section 168, where they make an application for the issuance of an EDI certificate for the emerging company.
Thank you very much, Doctor. If you are just joining us, we have been guesting the special advisor to the executive chairman, Federal Inland Revenue Service, on tax incentive. And he's been taking us to class on the topic of discuss unlocking economic growth, navigating the new tax incentive in Nigeria. These are the new tax incentive as embedded in the Nigerian Tax Act 2025. I want to also reiterate the point that the platform is still very much open for us to promote your goods and services, appreciating those that have actually keyed in into the program of Citn Taxation You, which comes up every first Thursday of the month, enlightening and educating our members on contemporary topics that will actually improve their knowledge base and also increase their economic base gradually. Let me come back to you, Dr. Cletus Ade, and I want to speak on the other incentives when it comes to EDTI. We all know that there are overlapping incentive schemes which can distort tax outcome. Can a company benefit from both EDTI and other incentive regimes?
I think the answer to that question is no. You cannot simultaneously, a company cannot simultaneously, enjoy the economic development incentive, EDTI, and other incentives simultaneously. The reason is that when a company is doing that, what it simply doing is what we call incentive shopping, meaning that it's a scheme that takes the company away completely from the tax space, from the tax net. Apparently, it's still around there, but it's not doing anything to contribute, to the revenue of government by, developing or applying schemes that keeps him or her, keeps it away completely from the tax net. As a matter of fact, the answer is emphatically no. A company cannot enjoy 2 incentives or simultaneously, because it is a disadvantage, to the government in terms of revenue that will be forgone.
Sincerely speaking, we cannot afford, when we give intense incentives, to collapse the system, and that's what you just explained, that you cannot You cannot have both on both sides. You take one and leave the other. I want to go
Exactly.
on the sectorial sunset clause. We all know that the incentive regime are not perpetual. They come with reviewed timeline. Can you explain to us the concept of sunset in relation to priority sectors?
Sunset here simply means that a priority sector, a priority company, a priority sector has, the number of, it has a period, a defined period within which incentive relating to that sector will have to exist. Beyond that period, for example, if it's a particular sector has a sunset, an incentive sunset of 10 years, it means that after 10 years of existence as a sector, that incentive, the EDTI, is no longer available to that sector, meaning also that no company can be admitted to take advantage of any incentive in the sector which sunset has expired. However, where a company that has secured an EDTI or Economic Development Incentive Certificate prior or before the sunset or before the expiration of that sector, the incentive period of that sector. As a matter of fact, such a company will be qualified to continue to enjoy its incentives until its own incentive period has expired. So you have various sectors within the priority sectors having different, sunset period, incentive period, in other words. Some have 10 years, some have 15 years, some have 11 years, but the maximum in the 10th schedule is 20 years, meaning that beyond 20 years, after 20 years, after 20 years has come and gone in the life of that sector, incentives will no longer be available for companies that want to take advantage of such incentives within that sector.
All right, thank you very much, Doctor. So still on the priority sector, just like the national priorities evolve, you must agree also that the incentive must also evolve at the same time. So the question now is, can the list of priority sectors be amended, and who can do so?
Yeah, the list of priority sector can be amended. First of all, it can only be done by the president. And where they become a need to amend that sector, it will be that the president, in his opinion, has observed that a particular sector needs to be included in the priority sector or the priority list where that sector has not been developed up to the requirement, the economic requirement of Nigeria, or that the president believes that it's expedient in the public interest, to include a sector in order to perhaps generate employment, attract foreign direct investment, in fact, diversify the economy, and do such other things as are necessary to advance the economic prosperity of the country. So it is the president alone that can cause an amendment to that the list content, the priority sectors contained in Schedule 10 of the new Tax Act.
Only the president can actually carry out the amendment, as we have, just like you mentioned to us, that the previous law actually accommodated 37 priority sector, but currently we have about 51. I will now at this point be inviting questions. It's always an interactive session because we don't know it all, and that's why we've had our members, even members of the public, joining us across the globe to be part of this particular program. Before I open the phone lines, let me put it that way, for them to bring in their question. It will be nice for me to fulfill my obligation in paying some bills so that I can come your way next month in giving you another insightful topic. And on that note, we'll quickly go on a very short commercial break and we'll be back to continue the program. Thank you.
Are you tired of long queues and incessant visits to the tax office? What if we told you you could carry out all your tax-related activities from the comfort of your home or office? With the KWIRS self-service portal, everything you need is just a few clicks away at selfservice.kwirs.com. Here is what you can do. You can file your payee assessment, submit your annual returns, individual and corporate, request your tax clearance certificate, apply for your CRIN, which is the Core Resident Identification Number, get your indigent certificate, register for Hajj and pilgrimage, and make all payments due to Kwara State Government. No paperwork, no stress, no office visits, just fast, seamless, and secure service anytime, anywhere. Start now at selfservice.kwirs.com. Need help? Call 070-0695-9477 or email helpdesk@kwirs.com. KWIRS. Play your part, pay your tax.
To the September edition of Citn Taxation You, a flagship program of our great institute, where we engage professionals, people who are policy makers, in giving us an insight into contemporary topic. And today, we have been engaging the special advisor to the executive chairman, Federal Inland Revenue Service, and he's been discussing with us unlocking economic growth, navigating the new tax incentive in Nigeria. Before I open the phone line for people to ask their question, I want to tell every one of us that last 2 months, we started a program by giving out gifts to the first 5 participants who actually participate in our quiz and also visit our social media handle. You cannot be part of this institute and you don't have information on things that are going on. And the best way to get it is by going to our social media handle. This month, I have a special package also for the first 5 fastest finger to give answer to our question. And trust, ask those that got it last month. They will tell you that they are eagerly waiting to participate. And you can only get that question if you wait till the end of the show. On this note, I want to be opening the platform for questions so that our guest, Dr. Adie, can definitely do justice to your question. You can signify by raising up your hands. We'll get across to you and we can open up the platform for you. It's question time from our participants who are connected to us globally. Do we have anyone who is raising up his hands to ask question, or do we have question in the chat room? If you are very shy, like me, you can definitely drop your question in the chat room. It will definitely be attended to. Okay, I have Adelano. That thing is being truncated. Is it Tinubu? So that we know how to call it in a very subtle manner. Adelano, can you unmute yourself and ask your question, please? Adelano, can you unmute yourself and ask your... Good morning,
Good
madam.
morning, sir.
Good
My
morning.
name
You
is
have the floor.
Adelani Tinuke.
Okay,
Adelani Tinuke.
Adelani Tinuke. Pardon me,
Yes,
I
sir.
only saw Tino. I didn't know whether it's
Yes.
Tinuke or Tinubu, but it's glad to
Okay,
have
yes,
it
sir.
that it's Tinuke.
Okay, thank you, sir. And thank you, sir, for this program as always. And my question goes that all this while I've been attending seminar regarding this Reform Act. I need more clarification on one, transfer prices, as it affects transfer pricing. One. Two, in a way, when you have an international client, when you come to do e-invoicing, right? And most of this, I don't know, I've attended a seminar regarding the invoices that you have to, when this is acknowledged, that how will the FIRS acknowledge when you have received that? But what if your recipient, that's the person paying you, do acknowledge you have an interaction with yourself and is hanging? And meanwhile, you have been paid, as in, so how will they rectify or detect that? I don't know whether it's clear. My questions are clear. I don't know.
Your questions are very much clear, but on the first one
Okay.
that has to do with transfer pricing, one thing I can assure you is that the webinar will definitely address that. What I'm speaking on today is about tax incentive, and I won't want to put my guest, who I know is a very core specialist in tax incentive, but be rest assured that the subsequent edition on the webinar that we are carrying, we address the area of transfer pricing. And if you've been joining us, we've spoken a lot about transfer pricing, but I can assure you that on this program, you have given us the boost. We'll definitely come back to you. But on the second question that has to do with e-invoicing, since my guest is from FIRS, is asking if there are possibly delay in this invoicing. We know it's a new initiative. Can you just give a little knowledge of what you know about this invoicing to address our question?
Well, invoicing is a new platform that is encouraging taxpayers to begin to adopt that model that does not create an environment for physical or fiscal. Is a software that creates a platform for taxpayers to send their invoices, issue their invoices online to their customers, and that also makes it possible for FIRS to have information about every transaction that is carried on by any business that is already on that platform and is already deploying that model. How their question is, if it delays, what happens? As a matter of fact, I won't have the competence to deal with that because it is might entirely be, a not network issue or an ICT, problem that can only be addressed very well to the understanding or appreciation of every taxpayer by an ICT, as a matter of fact, by those that may have developed that platform for the benefit of taxpayers and the FIRS. My suggestion perhaps is that the next, the institute should also create, should also be able to organize some education around this so that experts on this can talk on it, because I might be misleading, participants on this if I attempt to give any information that is not relatively helpful to the person asking the question.
Dr. Again, let me just take it off from you there. You are just on point. One thing I can assure our participants is when they give us this kind of a call, we are always attentive. I've picked one on transfer pricing. And we know that the e-invoicing, the reason why we are still trying to manage that discourse, we know it's majorly for the big conglomerates currently, before we come to the SMEs. But one thing I can assure you, that if regularly you participate in our programs, your institute is always out there to get experts that will speak to it. And I can assure you, in no distance time, we will be bringing a guest to speak to us on that. We have another person on the call. Can you unmute and ask the question, please? I'm trying to struggle to get the name. Technical, can you unmute and ask the question, please? We seem to be having slight difficulty. We seem to be having slight difficulty in unmuting and asking that question. But I think there are questions in the chat room. Please, can we have the chat room being projected so that we can pick one or two questions before I proceed? There's a question here, Doctor. If a company gets approval in the 9th year of a business with 10 years sunset in a particular sector, how many years will the business enjoy post-sector sunset?
Yeah, that's it's straightforward because earlier on we indicated that where a priority company or a priority company applicant secures a valid economic development tax incentive certificate before the expiration or the seizure of the incentive period for that sector, such a company will continue to enjoy that incentive status until the expiration of its own incentive period, meaning that, and of course, we need to remember that the incentive period is 5 years in the first instance. It's not automatically extendable for another 5 years. After the first 5 years, if the company, wishes to extend, it can make an application, but that application must demonstrate that it must have reinvested its profits 100% in expanding that priority business or priority product. In other words, the incentive status of that business would continue. But what I'm not sure of is that whether it will be empowered, it will be possible for the company to apply for extension, because the incentive period of that sector has expired, and so that might not be possible. But in the first instance, the life of that incentive will continue until the expiration of the incentive status of the company making the application.
All right, thank you very much, sir. So we have some of our participants already indicating. I would like to call on, I think this is Zainjim. Zainjim, to please unmute your mic and ask a question. Yeah. Zainjim, can you unmute your mic and ask a question? Oh. Okay. Okay. Yeah. You are live.
Good afternoon.
Yeah. Good afternoon.
Yeah. Please, I want to actually appreciate the speaker. He has actually gone in depth with information needed in relationship with incentives. So, but my question here is, some of us actually have not gone through the law. I'm sure some of the companies that will qualify for the incentives have been highlighted. But I just wanted him to mention some of this mentioned the information there that qualifies company to get some of those incentives.
Thank you very much, Zainab. Doctor, I want you to consolidate it with another question I'm having here. Somebody is saying that how many tax incentives are provided for in the new tax law? And possibly if you can mention few, which is what Zainjem asked just now.
Well, it's not, it shouldn't be about how many tax incentives. You have sectors, various priority sectors that qualify for, because the economic development incentive is an incentive regime. It's just an incentive regime. There are not many types of incentives within that incentive regime. The only thing is that there are various sectors, as listed in the 10th schedule, that are qualified for that incentive regime. And so you have to meet certain conditions to be able to take advantage of those benefits. One of which is that before you are issued a tax economic development incentive certificate, you would have incurred the qualified capital expenditure that meets or exceeds, the minimum requirement specified, in the 10th schedule as it relates to each priority sector. And therefore, once you are within any of the priority sectors listed in the 10th schedule, you automatically qualify to take advantage of that incentives. But don't forget that there are not many types of incentives there. It's just an economic development incentive that is in that talks about that schedule. So if you're ready to take advantage of that incentive type, it's no longer pioneer, it's not not incentives for companies in the oil and gas and so on and so forth. This is the one that is general to everybody, that if you fall within the priority sectors as listed in the stance, that you can just go ahead and take advantage. But don't forget that you must meet minimum entry requirements to be able to take advantage of.
You are expected to meet the minimum requirement, and that is sectorial. So it's not that we are counting something in here. Let me welcome Shike Ibiwoye. Can you unmute yourself and ask your question, Shike? Shike Ibiwoye, can you unmute and ask your question? Okay, while we are waiting for Shike, can we go to James Obogo, the great man himself? You have the floor. Dr. James Obogo, can you unmute and ask your question, please?
Thank you, Mr. Olusegun.
Yeah, good afternoon.
Okay, Dr. James, I come back to you. Shike, you have the floor, please.
All right, thank you. Thank you, MC, Mr. Olusegun, and thanks to Citn for this platform. Thank you to the special advisor, Dr. Ade. I think it's been a learning experience for us as professionals. So I just have a question, and my question is around the scheme for mergers and acquisition. So your explanation and the details based on the act with regards to the acquisition is clear. With regards to the EDI certificate, I mean the Economic Development Incentive Certificate. So when the companies are acquiring the other company, it's clear that the acquiring company takes over, and so the certificate has that, they have that status. And also the second scenario where the other product or the other products are not covered, where they can apply to join those products. So that's clear for me. But where I have an issue, and I need more clarity from you, sir, is where you mentioned for the mergers. I mean, two companies coming together. What I thought I have read from the act, from the NTA, is that where there is a merger, for some merging companies who have, the status, the certificate already, this incentive, the companies or the emerging company will now take over the certificate or the status of the new, of the longer one, which is the later dates. That's what I read in the act. So I will need more clarity from you, sir, because what I hear from you this morning or this afternoon is to say that both, or maybe all the companies will lose that status and then there will have to be a new application. So I'll need clarity on that, sir. Thank you.
Okay.
Yes, I
Doctor,
think
I'm sure you heard the question.
Yeah, I had it.
Okay.
I also have read that. I think it's a matter of interpretation as far as I'm concerned, because when companies merge, what happens is that they lose their identity. Is it not true? They lose their identity,
Yeah.
they lose their individual identity. And the merging company will not have an identity. The having lost identity, it means also that had enjoyed as a result of having, the economic development incentive certificate would have been lost as a result of that merger, meaning that the only thing the emerging company coming out of that merger can do is to refer to Section 168, where they would have to go through the process of application to secure an economic development incentive in the name of the company that has come out, has arisen from the merger. That's my understanding as far as that act or something is concerned.
Okay, but
Like I
just
said,
like you
it's a
said,
matter of interpretation. It's a
okay,
matter of
like you said,
interpretation.
it's a matter of
Anything that requires
interpretation.
interpretation is subjective. It's always subjective. So,
Okay.
but the position is that once companies have merged, from that background of losing their identity, they cannot individually say, okay, I still hold this, because the company as an individual company is no longer in existence. So it cannot bring that to the table.
Okay, thank you very much. Can I have Dr. James Obogo? Can you unmute yourself, sir, this time and ask your question?
Yeah, good afternoon, our presenter. Dr. Kwade, thank you so much. You are doing what you know to do best. Okay, I always enjoy your anchoring of programs. Thank you so
sir.
much. Yeah. Well, I think you have actually asked majority of questions that most of us have as far as India is concerned. And from other people that ask questions too, I think that matter has been exhaustively addressed. Okay. When he started his presentation, he mentioned the minimum turnover that's tax exempt. I want a clarity of this. He did mention 100 million. Is it 100 million or 50 million? I think for the listeners, we want a clarity or clarification about the actual figure. And I thank you so much.
Yeah, Dr. Bogo, thank you for that question. I think it's clear in the act that there has been an enhancement of the exemption threshold for small companies. And so small company in the act is defined as any company with
There seems to be a network glitch from your side, sir. There seems to be a network glitch. Well, part of the things that we try as much as possible to do is to make sure that as professionals, we contribute our own quota to grow our economy, more so that we have a lot of tax incentives under the EDTI that we have currently. Before I go to announcement and gradually winding up to have my commercials, I'm being informed that I have my president, the 17th president of our great institute, a man of great substance. We refer to him as a professor because he's an erudite scholar that will always give insights to things. It will be nice for me to hear the voice of my president, Dr. I refer to him as, he will tell me Sheson is Mr. But you are a professor par excellence. Let's welcome Mr. Innocent Oagwa, FCTI. I'm sure he has a word for us, the members and members to be. My president, you have the floor, sir.
Thank you very much, Session. Thank you, distinguished paper presenter or the anchor, my brother, friend, and colleague. I say, Chief Adie, Dr. Adie, you well done. and our colleagues on this call. I appreciate you all. Knowledge is not a destination. We always desire to continue to move on and be building it up incrementally. And it will just stop learning once we are no more. But in as much as we continue to live, we need to continue to learn. And we thank our guest this morning for sparing his tight schedule, the FRS to come and be with us. I appreciate you. I appreciate the anchor. I appreciate MCEC, and I appreciate our distinguished audience. Thank you.
Thank you very much, my president. You see, when he took over, there's one thing I've actually learned. He wants to impact knowledge. And that's why people like us, we always refer to him as a professor. He's a man that believes that you must increase your knowledge base. And that's why in the last few weeks, we've been organizing webinars, speaking to our members on some of the key areas on the new Tax Act 2025. And I want to believe as many as have been joining, they've seen it as a very beneficiary program, which they must always attend to. I don't know if our guest is back online. Our technical team, is our guest back online? Oh, not yet. Concro, I don't know. You have your hands raised up. Can you ask your question? I will note it down for our guest. Concro, can you unmute and ask your question, please?
Yes, sir. Thank you very much. Good afternoon. My question is, with regards to the what's it called now, the incentive that exempts the smaller companies from paying taxes. What actually is the threshold? I heard the presenter said 100 million. I'm confused. Is it 100 million or 50 million? That's my question, sir. Thank you.
Okay, thank you very much. That's the same question Dr. Obogo tend to seek clarity. Yeah, my president.
Can I provide my own perspective to it?
Please go ahead, my president.
Yes. Initially, at the point of National Assembly moderating these laws, it was moving from 50 to 100. So some people, if what you are seeing is 100, what they finally approved is 50. So, but it depends on the version of the law the person has. To the best of my knowledge, as at this morning, it is 50 million and asset base of not less than 250 million. And again, I also want to mention that we should bear in mind that the incentives should not be restricted to only this industrial development credit. All of us have been getting incentive in form of waivers, in form of reliefs, zero-rated, exempt items. Those are also reliefs. So we should not look at it as if when people were asking questions as if the conditions, that one is for big players, priority sectors, which the resource person have exhaustively dealt with. But in our own individual understanding, we should bear in mind that incentive comprises a hog of all reliefs, exemptions, waivers, and provisions in the law that grants both small, micro, and large. They are all released holistically. That is just an intervention I wanted to make. Thank you.
Thank you very much. The other time I referred to you as a professor, you said you are not one. You don't need to be in the forward of the class to be a professor. I know if I give you this platform, you would definitely give us a deeper insight into other areas. You've heard it. Somebody was asking question in the chat room of the gazetted copy. We have it now, and I'm sure maybe in no distance time, if you visit our website or social media handle, you can have the gazetted copy. But take home from here, as you heard from our president, the threshold is 50 million and the asset base is 250 million. To round off, sir, our guest for today, Dr. Cletus Adie, can we have your parting shot possibly a word for our guests, our participants that have hooked up to us on this program this morning. Doctor, are you there?
I'm still here.
Okay, please, can we have your parting shot, sir?
Thank you very much. I want to thank you very much for creating this environment for us to be a part of this conversation. It's quite impactful, and I'm very sure that both of us, those listening and even me that is leading this conversation, most would have learned a lot from the reactions of participants. As a matter of fact, incentive is a key instrument that advances the economic prosperity of a country. It depends on how well and accountable it is managed. And so as we implement this incentive regime, my desire, or our desire, will be that, the management, the implementation of this particular incentive regime should be such that it is totally mutually beneficial to both government and the taxpayer. That way, it will make sense of the very intention for, formulating and implementing this tax incentive regime. It is my sincere hope that this will be taken seriously and the right direction adopted, so that at the end of it all, it will not be that, oh, we have not done well after all. After, modifications have been done to existing tax incentive regime just to see how well this can achieve the goals or objective for which the implementation or for which the amendment was carried out. I want to thank you very much for the opportunity to be here, and we look forward to being together again, even when I'm invited to listen, to other presenters in the future. Thank you very much.
Thank you very much, Dr. Cletus Agere, the Special Advisor to the Executive Chairman, Federal Inland Revenue Service on tax incentive. One thing we can guarantee you is at the comfort of your office, every first Thursday of the month by 11 a.m. to 12:30, we ask the approval and the blessing of the President and the member of the Governing Council of our institute to always enlighten and educate. Just make sure you check the social media handle of the institute, and you'll get information on how to hook up. And you can always visit our YouTube channel to have knowledge of the previous editions that we have. Thank you for guesting us, and we believe when next we call, you always give us your time. Let me quickly run through the upcoming programs and activities of our institute. It gives me great pleasure to announce to us that we need to groom ourselves by bringing new people into the fold. And the commencement of the examination registration is actually is in progress. This comes up Tuesday 14th to Thursday 16th October. And we want to encourage you. It's now CBT and CBE at all levels. Get somebody to be part of the institute that is saddled with the responsibility of driving the revenue of our country. Make sure you get a student in. Register your words and let them start being part of this program. Also, in continuation of our tax, the webinar series on the new tax law, we will be having the 12th edition come next week, Wednesday, the 10th day of the month of September. And we will be speaking on tax administration re-engineered, understanding the foundation of compliance under Nigerian tax law. Make it a day with us. And like I said the other time, you need to pay up your subscription. I know a lot of us are actually, expecting the MCPD credit hours that we have promised you. We are actually committed to it, but like I said, it's going to be strictly for the financial members those that are up to date. And you can pay up your subscription by visiting the portal. And you can also reach out to the membership department or any member of the institute. They will guide you on how to pay your subscription. It is important that you update your credit hours so that when you need a service of the institute, we can offer those services to you. On that note, we will be having the mandatory professional training program, the MPTP program. For this month, we have two. We have the JOS virtual MPTP program coming up September 9. It's a virtual program, and we encourage you to be part of it. The registration fee is 15,000, and you have the topic at which you can pick if you want to be part of that program. Don't forget, a lot of us have actually part of our subscription. You have 15,000 already embedded for you to enjoy this MPTP program. All you need to do is just to pick your topic of choice. We'll also be having the Abeokuta virtual MPTP program come September 18. And we want to encourage you to please plug into it. You have the topic being displayed there. We'll be talking on impact of tax policy and tax reform on economic growth in Nigeria. The VAT fiscalization come September 18. The Abeokuta virtual program will be holding. There will be legal practitioner conversion program come October 28th to 30th. Legal practitioner conversion training program. As we know that this institute is open to both the financial practitioners and the legal luminary. The pre-induction orientation program comes up November 25 to November 26. Pre-induction orientation program comes up November 25 and November 26. We want to encourage everybody to try as much as possible to win a soul by joining our institute, and the induction program, we promise, is going to be a very wonderful one. On a final note, the 53rd induction ceremony will be holding in Lagos, and that comes up on Thursday, the 27th day of the month of November. Make sure that for those that are coming up via the CTA program, you are always welcome. Those that want to have a direct entry, the portal is still open now because the induction will be coming up Thursday, November 27th. Make it a date with us. I want to go on the final note, like I promised you, before I wind up the program for today. The question for the month. And like I said, you can only respond via our social media handle. Visit our LinkedIn, our Facebook page, our Instagram page, TikTok page, and also on the YouTube. And the question for the month, if you are there live, let's project it. It states, what was the theme of the Democracy Day edition of Citn Taxation You? Let me repeat that again. And this is just a very simple one for those that have been following our series on monthly basis. What was the theme of the Democracy Day edition of Citn Taxation You? The fastest finger is actually being monitored by our social media handlers, and we'll definitely have a gift for you when we come next month in the month of October. I want to emphasize again, you can be part of this program by promoting your goods and services on our monthly program, Citn Taxation You. I want to say special appreciation to our sponsors that have been our backbone, the Lagos State Internal Revenue Service, under the leadership of Dr. Ayodele Suba, FCTI. I will not, but always recognize the Executive Chairman, Plateau State Internal Revenue Service, our own Dr. Wines, and the woman of substance who do greatly, I don't want to say exceeding the limit, because I don't want sweet to come and override this program from me, but she's a woman of substance, the Executive Chairman, Kwara State Internal Revenue Service, our own Dr. Folashade Omosoya. Thank you very much for partnering with us in making sure that we give in-depth knowledge, educating our members. Until we come your way next month for the October edition of Citn Taxation and You. Make it a date with us for the remaining webinar that we have in the series on Wednesday, and we'll be there to give you an insight method. I remain your host, Olusesan Okwade, popularly called MC Easy, and also my co-anchor, Oyebanji Lawal. You'll be seeing us coming up in different formats, but stay clear every first Thursday of the month to be part of our flagship program, Citn Taxation and You. Until then,